Hello again, Solis Wealth family. Greg Solis here with the update. First on the family front, Monica and I had the privilege to go to Banff out in Canada. I'd never been there. It was cold. But I had a great time. Actually, once a year, LPL does their so-called Summit Conference, and this is where I have the privilege to meet with the top 1% of the LPL advisors, which is an incredible group of people. And a lot of you may not be aware of this, but LPL has over 23,000 advisors now. They have over $1.3 trillion under management. And I'm just one of those 23,000 advisors. So it's a large organization, and they take the top 1% to some special location, and we get to kind of hang out and talk about things that are working and not working and all that kind of stuff. So we had a great trip, and it's especially nice because I spent some quality time with Monica as well. So she went with me, and we came back. I got to tell you though, I was happy to come back to the desert. I like the warmth of the desert. There's a reason why I live in a desert. But anyways, all is well with our family. I hope everything is well with your family as well. Market-wise, well, what a crazy week last week was. Finally, the Fed did lower the rates. We've been talking about this for a long time. And for the first time since 2020, the Fed did lower the rates. And they didn't lower them 25 basis points or 1/4%. Like we discussed, it was 0.5% or 50 basis points. That was my inclination. That was my thought that they would probably do that. They have to be very cautious though, because they don't want to lower them too much too fast, because that could create a little bit of panic. The market might be looking at that saying, well, wait a minute, is there something going on out there that we're not sure of? But I think 50 basis points was the right move. The labor market had certainly softened. We are seeing a little bit of a slowdown in the economy. Inflation seems to be under control, and the Fed doesn't want to get behind the curve here. They want to make sure that they are not, they've been pretty hawkish. They want to be a little more dovish. That'll create a little more growth with bringing the Fed funds rate down a little bit. We saw the stock market rally a lot. As a matter of fact, the S&P 500 and the Dow both went through their all-time high again. So we hit another all-time high on the equity markets. The NASDAQ is still down about 3% from its all-time high, but it's covered a lot of ground. If you recall, it was down over 10% here just recently. So it's recovered a lot. Bond market looks pretty solid. We actually saw interest rates go up a little bit on the longer end on the 10-year Treasury, but the 10-year Treasury is still hanging right around 3.25% after being as high as 4.75% not too long ago. So we've seen interest rates come down quite a bit on the whole yield curve. Stock market is going up. That's been great to see. The economy seems to be pretty solid, pretty good footing. We don't see us slipping into a recession. So the Fed finally did reduce those rates, and we think there's going to be more to come. So I think the market might be a little overpriced here. The price earnings multiple, if we look at the S&P 500, what we're looking for in 2025 with the earnings, we're probably trading close to a 22 price earnings multiple. That's a little too high, so we might see some pullbacks. But overall, we still feel good about the economy. Everything looks pretty solid. We like it that the Fed's lowering rates, but it's going to stay volatile. So hang on tight, as I always say, but that's what's going on right now. That's why we've had the big rallies, as the Fed lowered the rates finally. So my very best to you and your family. Call us if you need us. You know we're here for you. Take care and God bless.